Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar, an immediate countering bearish harami on Friday, but one that could also be seen as an indecisive spinning top. This after the previous session's interesting key reversal up. Prices closed once again, after a temporary reprieve, below the bright green lower time, currently 113.89, of the late February to mid-May bullish Andrews pitchfork. Though this time not even attempting to test the July 2023 high that's below at 112.76. Now this bright green lower time is roughly parallel to the overhead broken but increasingly losing its influence dark blue late February to early May uptrend. Broken uptrend, currently at 115.58. I said before that I would likely downgrade the dark blue uptrend and finesse the bright green bullish Andrews pitchfork into a shallower bullish shift pitchfork. I'm still tempted to do that, but I feel like holding off this for a short while yet. We are still moving within a fairly quiet area between the July 23 high at 112.76 that's below and the overhead June 2020 high at 114.22. Beyond the June 2020 high, we have the bright red neckline extension, currently 114.61, of the important August to September 2020 head and shoulders top. This bright red neckline effectively capped the market back in April, along with the January 2022 high at 114.82 and the February 22 high at 114.95, and it looks like it's ready to do the same again. Looking below, we have the 2023 high at 112.13 and then the possibly ominous rising green short medium moving average below, currently at 111.80, just above some congestion at 111.39. Finally, as I've said now repeatedly, we are set up with just 5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025, either over 110.36 or 103.53, then we're on. Anything in between would have a lesser outside year pattern. I'm at this stage, even though I'm very tempted, not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Now so far today, a lower open and then a reactionary move higher from the start, back up through the green lower time and the June 2020 high and towards that bright red neckline. Cable, aka sterling against the US dollar. An immediate countering bearish engulfing pattern on Friday after the previous session's bullish thrusting pattern. And it seems that we are not done with testing the interesting purple neckline extension below, and that's currently at 134.34, the small but influential mid-November to early December 24 reverse head and shoulders continuation pattern, though it could just be that prices are once again fed up with trying to push up through that overhead treacle, that is the congestion between 134.83 to 136.43. Further overhead, we still have the February 22 high at 136.43 and then a fairly free area until the January 22 high at 137.48. Further down, we still have the 2024 high at 134.36. Then a seeming free zone until congestion between the March 22 high at 132.98 and the 61.8% Fibonacci line of the June 16 to September 22 move at 132.46, plus the shallow rising neckline extension to the recent small head and shoulders continuation pattern, which is currently at 132.39. Okay, so much like Euro-dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. That's if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between, we would have a lesser outside year pattern. I'm at this stage not even going to contemplate, despite some, obvious signals. I'm not even going to contemplate what the result at the end of the year will be, just that we are set up now to achieve one. Now so far today, a lower open and then a reactionary move higher from the start, back up to testing through the congestion between 134.83 to 136.43. US dollar against the Japanese yen. A lower but still indecisive spinning top on Friday after the previous session's spike up over the 50% Fibonacci line of the January 23 to July 24 move at 144.58 and over the combination of the breached big picture bearish item, which is the bright red upper time currently at 145.31 of the July 24 to January 25 bearish Andrews pitchfork and the declining short medium moving average currently at 145.39. This time prices managed to drop and test but not breach once more the lower trend line, currently 143.34 of the late April to date ascending expanding wedge pattern. Now going back to the bright red bearish pitchfork, this pitchfork, though at one point breached and since repaired, has shown and continues to show the bearish angle of attack of this market. Additionally, the other major pattern I'd previously pointed out, which is the whole February to date action, even the whole mid-January to date action of a descending expanding wedge pattern, is still there. The bright red upper time making up the upper trend line and the pink lower trend line, currently at 134.15, of the well highlighted early February to late March descending wedge pattern making up the lower trend line. For the earlier and smaller ascending expanding wedge pattern, I had previously laid out some targets below just in case. We have a primary nearby target X at 141.95, a harder to achieve secondary target X1 down at 138.35, and a tertiary much harder to achieve target X2 down at 136.45. These are now under threat with the market reverting back within the pattern, but for now I'll still leave them out there. So far today, a follow-on lower moving down once more below the lower trend line of the ascending expanding wedge pattern, but not by too far right now. US dollar against the CNH, the offshore Chinese yuan. A key reversal up on Friday after the previous session's indecisive spinning top. That was also a key reversal down. For a large part of last week, the market had been effectively bracketed on the top side by the dark blue neckline extension, currently at 719.90, the late August to early November 24 reverse head and shoulders pattern, as well as the congestion formed from May 2020 high at 719.64 and the 50% Fibonacci line of the September 22 to April 25 move at 719.91. Whilst below we had the support of the bright red lower trendline extension, currently 718.19, of the late January to late April descending wedge pattern. However, Friday saw a break up higher, significant because of the pattern and because it was on a Friday. Now looking overhead, we have the lurking flatlining gold long moving average, currently at 722.58, which I will talk about a little bit more later on, with some congestion just below at 722.88. Mainly March this year based. Some congestion just beyond at 722.88, mainly just March, but this year based. Now beyond that, we still have that March based congestion, but it does seem to be weaker until we reach a lesser recent Fibonacci line at 725.33, and the short medium moving average currently 725.54, and also the declining medium moving average currently 726.33. A final strategic observational point. Note how the gold long moving average is very flatlining. If prices do stray too far away from it, then they seem to be brought back towards it, and that applies in either direction. So far today, well, a spike up towards the overhead gold long moving average, but then an immediate pullback lower, and we're looking like a bull spike right now. US dollar against the Brazilian real, and this is getting silly now, it really is, but is, as if you needed it, yet another indication of a larger intraday indecisive market here. We had on Friday an eighth countering bullish engulfing pattern after the previous session's seventh countering bearish dark cloud cover pattern. This continues to come at a crucial time as the market earlier thrice pierced the key 560 even level, as well as the shallow bright red lower time currently at 564.90 of the mid-August 24 to early April 25 bullish shift pitchfork, which, incidentally, the market uses as a base on Friday along with the once significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Further below we have the recently finessed purple May 24 today uptrend. That's currently at 560.63. Though I need to reiterate that I don't think these, apart from maybe the 560 level itself, may be that good as supports, and it wouldn't surprise me to see them being tested again. Topside, we saw the market pierce but ultimately close right on the green flatlining short medium moving average, currently 572.30. A little further up we have the December 2021 high at 575.78 and a declining mauve medium moving average, currently 576.83. And also the flatlining gold long moving average, currently at 578.49. Finally, please bear in mind that we had a monthly key reversal down here for April, and all things should be seen in the shadow of this pattern. US dollar against the Mexican peso. A counter to the counter combined key reversal up and bullish engulfing pattern on Friday after the previous session's immediate countering bearish harami. Prices managed to push up through the overhead resistance between 1940.68 to 1936.27, away from the support zone below between 1915.03 to 1920.38, made up from the 50% Fibonacci line of November 20 to April 24 move and the March 2020 low, but not really exploiting the move higher, closing on top of the resistance. Beyond this overhead congestion, we have the 2021 low at 1953.63, the April 22 low at 1971.68, and then the declining short medium moving average, currently 1977.99. Overall, this is a seeming pause, if the follow-on lower, from the move down below the overhead very wide congestion band that eventually became a rectangle top pattern and is centered on the September 22 high at 2057.65. That's stretching roughly between 2017.20 up to around the 2083 area. It's also worth bearing in mind that April became a monthly key reversal down. Now so far today, an initial small further attempt higher, but soon losing incentive, and prices have now dipped back below the overhead resistance, if only just.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.